Let's get started. Welcome to the Real P&L Show, where I share my real P&L on 4 accounts and share my proprietary safe wheel strategy for free. Each one of my 4 accounts has a separate trading strategy in it, so you don't get strategies mixed up, right? You know exactly what strategy and goes into what account, so you can actually see what is happening with the actual portfolio and what's actually happening with that particular trade system in real life. And that's what I do here. I have 4 accounts. I want to make sure my audio is working okay. You guys let me know. Will says the audio is working good. Happy St. Patrick's Day. Yes, happy St. Patrick's Day. Today is St. Patrick's Day. Oh, I should have green on. And Mad Mike says, hit that like button. I appreciate that early on. Be sure to post any questions you might have before I end the broadcast. The earlier the better, because we're on a little bit of a delay. And sometimes I get questions in at the last second, and I'm not able to answer those because I'm already ending the broadcast. All right, let's start with the earnings edge. I'm going to go over my accounts first. This is my earnings edge account. I don't have any open positions right now. So you can see 11,101. That's the account value. I'm going to put that into the spreadsheet so it's somewhere where we can kind of look at it and compare it. Let me bring that spreadsheet over here. It should be the same as last week. Let's see. No, okay, no. So it's 11,101. What was the last thing I traded? Here it is. I traded MU, made $360. So I guess you didn't see the results of that last week. So that's a trade. I don't have any current open trades since in 2025, since my version 3.0 earnings edge version, 6 wins, 1 loss, average win 978, average loss 516. I have an 85% win rate. I don't expect the win rate to be that high, but I do expect the winners to be larger than the losers. But so far in 2025, I'm up 73%. That's pretty good. That's really good. Let's see what SPY is trading. 565.74. So about the same as what it was last week at this time. You can see that the S&P 500 or SPY, the proxy, is down 3.37 this year, 2025. So you can see I'm vastly outperforming with the earnings edge this year, 73% versus minus 3%. And you can see what I've done in 2022, where I outperformed, 2023 underperformed the market. Last year underperformed quite a bit, but with this new 3.0 system, doing quite well. Overall, since I started trading this system in 2022, I haven't done anything else in this account. I haven't added money, take away money or anything. And the account is worth 11,000. I started with 5,000. So I'm up 122%. The market since 2022 is up 23.27%. So that's the earnings edge. I might put a new trade on today, but last week I took off a trade there again. It was MU for a $360 profit. Let's talk about the PL5 Pro. This is designed to outperform the market, but it's mainly more designed to make money in every market environment. That's what it has done. Let's see what see how much is in that account or what the net lick is, because that's what's important. The net lick. How much can I cash everything out for right now if I needed to? 487,769. 487,769. 487,769. So it's up about $8,000 from last week. All right, let's talk about this. I started trading live July 19th, 2024. Started with $403,907, and I currently have $487,000. Now, there might be some options traders that make that type of, up $80,000 in a 8-month period or whatever it is. But the thing is, there's a lot of risks, right? This has it has a lot lower risk. So the drawdowns are very low. So I'm able to accomplish this with low drawdowns. I mean, you're okay with big drawdowns, and there's probably people trading the wheel right now that are down 30, 40% of their account. Um, if you're okay with those large drawdowns, yeah, go ahead and do that. I call that level 4 trading. But if you're interested in having low drawdowns and nice, good returns, healthy returns, the PL5 Pro is the way to go. You can see how I did the last 6 months of 2024. I did 16%. The market was up 6.65. So far this year, 2025, I'm up 4.11%, and the S&P 500 is down minus 3.37. So outperforming by about 7.5% this year, because we're in a grind down market, right? And so the market's grinding down. It went down from 10% approximately from its peak. My account's not down from the peak of February 19th. That was the peak of the market. My account's not down from that time frame. But the market's down close to 10, or it did hit a 10% mark. So overall, since I started trading this live July 19, 2024, I'm up 20.76%, and the market is up 3%, 3.05%. So vastly outperforming the market and making good money, obviously up about $85,000 over the last 8 months or so. So that's a PL5 Pro. Now let's get into what's next. The PL5. What's going on with the PL5? This is designed specifically to outperform the S&P 500. So it will draw down with the S&P, but it is designed to outperform the S&P no matter where the S&P ends up. And I'm trading this in my Interactive Brokers account because I have started with about $30,000. I started with exactly $30,000. And because I'm using IB because I want to keep my commissions relatively low because I'm trading it with /ES. So you can see I can't share my entire screen on Interactive Brokers because it'll show my account number, and I'm live, so I can't, there's no way of getting rid of that once you show it. So 32,993 is the current amount. So it's up a little bit from last week, 32,993. So I started this on July 16th, 2024, so with $30,000. And all the way till the end of 2024, from July 16th, I did the 10.2%. The market was up 3.94 on that day, from that day. Currently in 2025, the PL5 is down 0.22%, and the market's down 3.37%. So outperforming the market by 3% as expected, and drawing down with the market as expected. And overall, since I started trading this live July 16th, 2024, I'm up 9.98%. The market is up 0.44% from that day, July 16th, 2024. So outperforming the market by about 9.5%, doing quite well. I expect to outperform the market, but outperforming by 9% is probably a little more than what I expected, but I'm not complaining. All right, let's talk about the safe wheel. What's going on with the safe wheel? Well, let's see how much money is in that account. That would be this account here. Nope, that would not be that account. It would be this account here. 57.29. Let's put that in there. 57.29. So it's up just a little bit from last week. You can see how the safe wheel is doing this year. In 2025, it's up 4.54%. The market down minus 3.37%. So in 2025, safe wheel is outperforming. Last year, it underperformed, minus 14% versus plus 28%. So pretty big underperformance there. And then in 2023, it underperformed, but in 2022, it outperformed by about 40%. So overall, since I started trading this, I've made virtually every trade live on YouTube, except for the little $5 calls that I buy on Friday. Since 2022, the beginning of 2022, it's up 4.58%. The market's up 19.11. So fairly close nominally, but remember, I get about half the drawdowns of the S&P 500, which means that my risk-adjusted returns, you can basically double this number, this 14% to 28% versus 19% on a risk-adjusted basis. So outperforming on a risk-adjusted basis, underperforming a little bit on a nominal basis. Okay, so that's the safe wheel. I'm actually sharing my net liquidation. I don't know anyone else that shares their net liquidation. If they do, there's a couple other people, but they're down on the year, and they're down from last year too. So they're down last year and they're down this year. I'm sharing my net lick, and I'm up last year and I'm up this year. So there's a difference. Okay, so let's talk about what I need to do with the safe wheel. Let's talk about trading the safe wheel. Okay. Where am I with it? I'm going to look at my positions. I have two hedges on. I have the long call that I buy. I spend $5 or $6 every week on a call. I do that on Fridays. That's the trade that you don't see because I'm not live during that time. Now I've got that one's fine, but I have my put hedge where I'm long 3 puts and further out in time. So I asked myself 3 questions with this. Number 1, do I own 200 shares? No, because if I did, I would see if it paid off. Number 2, is it close enough is it within 70% of the actual price of LI? And the third question is it 100 days or under? Well, yes, it's under 100 days. Okay, so I don't care how close it is anymore because I know I've got to move it. I've got to roll this or sell this and buy another put hedge. Why? Because it's under 100 days and it's depreciating too fast for my liking. It's depreciating too fast because I'm selling premium up against this, and I need the premium that I sell to depreciate faster than what this is depreciating. So what I need to do is move this out further in time so it doesn't depreciate as fast. What am I going to do? What am I going to buy? And I'm going to sell this. I know that, but what am I going to buy in its place? Let's take a look at the chart, at the chain. I want to get something as close to 150 DTE as possible. So 186 is where I'm going to go. So I'm going to collect a strike. I'm going to pick one of these strikes. How do I pick it? I want to get something within 80% of the actual price of the underlying. Everything in this trade in the safe wheel has to do with percentages. It's all percentage based. So 26.42 times 0.8. I want something 80%. So I could buy the 21. It's close. I mean, technically, I could go with the $22 strike or the 21, but to go exactly by the rules, I'll go with the $22 strike, okay? Because it's got to be within 80%. And this is not quite within 80. 21 is not quite within 80% of 26.40, okay? So, but 22 is. So I'm going to buy this one. I'm going to buy the 22 strike here. But I'm also going to sell what I have in existing inventory. So I'm just going to roll it, right? I'm going to do both of them at the same time. It's kind of like a spread, if you say. So I'm going to buy this one. But I'm also going to sell the other one. So let's do that. I'm going to take a note here of which one I'm going to buy the $22 put. It might be easier to just do it here. So I'm just going to click here and create rolling order. So I'm selling this one here. Now, which one am I going to buy? I got to remember that one. I'm going to go look it up again. Let's see. Let's move this out of the way. I'm going to buy September 25th, 22. September 25th. Okay, so it's going to be the September. It's the 19th of September, right? Make sure I'm in the right. 19th of September, correct. So I make sure I'm in the right thing. And now I'm going to go with the 22. That's the one I'm going to go to. So I'm going to end up paying a debit here. Around $1.35-ish. Try to pay less. So I'm going to exchange my current put hedge for a new one. I'm going to do 3. Okay. So when I get done, I'll have the right hedge on. I'll have the other one sold out. I want to pay as little as possible. I don't want to take too long here because I'm live. And let's see if we can get this thing filled. Oh, now it moved up a few dollars against me. Okay, so I filled that. Now I own a put hedge. It's a little closer, right? Went from the 20 to 22. It's within 80% of my actual price, and it's got 186 days. It's not quite as powerful as this one is, right? The deltas aren't as high. That's okay. It'll protect me. All right, so now that I have my hedges in place, I'm going to run the traditional wheel at this point with LI. And the way I do that is I go into the most recent expiration cycle, the one that expired on Friday, that will expire on Friday. I don't own any shares. I'm not going to try to write a covered call. I'm going to actually sell a put. And I want to make sure I get enough premium. I want to get at least like $26, $27. I can't get it here at the 25 strike. At the 25.50, I could. But I always kind of like to go one back. So once it qualifies, I like to kind of go one more because I can collect a lot more. So I'm going to sell the 26. I'm going to sell one of those. And it looks like the bid's about 55. See if I can just get it filled at 55 and collect $55. Okay, so that's good. So I collected my $55. Get to keep that. And that is the safe wheel. So ABC, always be collecting. So I collected $55 there. I did pay a debit of $140, but this will last, this 186 here, this is going to last me for a long time, this hedge. More than likely. I mean, it might pay off, or it might just last for a long time. The last one, I think I had this last hedge on for, I don't know, 2 months, 3 months, something like that. Okay, so that is the positions. Let me see if there's any questions or comments. I do see that there are some. Will said the audio was good. Oh, happy St. Patrick's Day to everyone. I should have put green on today. Also, Mad Mike says, hit that like button. I'd appreciate it if you did hit that like button. It would help the channel grow and also help put more pressure on the YouTube instructors out there that don't share their P&L, which is pretty much all of them, except for like 2 others. And if you want to get those guys to share their P&L, put some pressure on them, the best way is to help my channel grow. And the best way to do that is just simply hit that like button. And the Shovel said he was first, even though he was third. Nothing new there. Okay. Will says, with recent tariff announcements causing market volatility, any adjustments to your option strategies to account for sudden shifts in sectors like manufacturing or imports? The answer is no. I don't use fundamental analysis or a story about a stock to make any decisions. All my decisions have already been made. I trade quantitatively, and all of my decisions have been made before I start trading. And they have nothing to do with a story or anything that's going on in the market. The market could go up, it could go down, it can go sideways, it can crash, it can go grind down. I have a plan for that already before I start, before I even open up my trade. The Shovel, hit the like button. Thank you, Shovel. Yes. Will, is there any edge from people buying more protective puts or straddles in this environment? I don't believe so, because you don't know what the market's going to do. It's been going down since the 19th of February, but maybe it's going to go back up, and it's going to hit all-time highs again, because more people are putting money into the market because they're putting money into their 401ks, and then it's getting filtered into the S&P 500. And there's inflation. So there's a lot of reasons why the market can go up all the time too, not just go down. Less is more. The last couple of months, the market is down a little, but volatility has significantly increased. How has that impacted your strategies? Well, I always like to talk about my top strategy, which is the PL5 Pro. During that first leg down, the first time the market goes down, my P&L will go down with the market. So if the market's down 3%, typically I might go down 3% or maybe 2. Maybe the market's down, well, the market was down close to 10%. I was down maybe 2 or 3%. Okay, so I'm not going down all the way with the market, but I'll go down with the market. And once the market levels off, like it started to kind of level off here in the last few days, that's when I recover and actually start pulling away. And actually I am up for the year, right? So, and then the volatility. So what happens is I end up putting on new trades when the volatility is high, and I have a short Vega trade. So when the volatility comes down, my trade starts making more money. So, but during that first leg down, because I'm short volatility, I kind of, I'm the trade's under a little bit of pressure with that volatility increase at first, but then I'm able to capitalize on that volatility. There's a lot of options traders out there that they don't have a plan for when volatility expands. They just have all their existing positions on and they get annihilated with that expansion and volatility. And they get beat up so bad that when they try to put on new trades to capitalize on the volatility, they're playing so much catch up that they're not going to catch up for a long time. My system catches up right away. Shovel says, my PL5 record since August is 12-3-1 with one open trade. The open trade is very close to full profit now. Yes, I appreciate that, Shovel, letting people know how you're doing with the PL5. You're actually trading the PL5 Pro. And yeah, 12-3-1. Yeah, that's a good record, and sounds about right. It has about a 75% win rate. And the winners are larger than the losses on average. Will, no green on. The green from profits will have to do. Okay, yep. John, have you tested the safe wheel returns on larger accounts where you purchase more layers, shares, and puts with the money gained from selling premium? Well, I don't really think I need to, because you can just, the way that I sized the safe wheel, you can just increase it. Like I started with $5,000. It's worth, I don't know, $5,600 or whatever it is. Let's see. It's $5,700, so it's up $700. So if you had $50,000, you would be up $7,000. If you had $100,000, you would be up $14,000. So you can kind of, just ratchet it up like that. Now, one of the things that a lot of people do is they will start to diversify with different underlyings, which is a good idea. Initially, I didn't think it was a great idea, but then I thought about it and I'm like, yeah, that is a really good idea. So you can use different underlyings and that'll give you more diversification. So if you were trading $100,000 with this thing, I would trade, maybe at least 5 underlyings with it. That gives you more diversification. So that's what I would do if I was trading a larger size. I would not just stick with one underlying. That's a really good way to go. I like that idea. Someone else came up with that idea, by the way. I don't remember who it was. Okay. Announcements. If you are a trader with $125,000 to trade in your trading account, then I have a special opportunity for you happening this Saturday in about 2 weeks, March 29th, 9 a.m. Pacific. I'll be doing a live masterclass on the 8 obstacles that you must overcome to find your trading edge. And you're most likely only using the first 3. Plus, I'll be showing you my proprietary trade structure that passes through all the tests to provide a proven edge, and that you can use to see returns of 15 to 25% per year based on back test and forward test in less than 15 to 20 minutes a week. So if you want to learn more, click the link in the description and hopefully I'll see you there. Okay. I got a couple more comments here, questions. Leslie Moore says, that's interesting that your strategies are up in this new environment. Most others are taking a larger than usual hit because of the volatility increase. Correct, because if you sell option premium, you're typically going to be short volatility. And being short volatility with options, it can go really bad really fast if you don't know what you're doing and if you don't have a plan and you don't already have a plan in place for this grind down market. Grind down markets are the hardest markets to beat, and pretty much all option premium sellers that I know of that are on YouTube are getting hurt right now. I don't know any other premium selling option trader on YouTube that accounts for the grind down market, that knows how to beat the grind down market. The PL5 Pro can do that. The PL5 can do that. But I don't see any other systems out there that can do that. You could see there's a couple other guys that show their P&L. You can see what's happening to their net lick. And of course, the people that don't share their P&L, yeah, you don't know what's going on. All you do is see the cherry-picked winners, right? Or, wow, there's a great opportunity right now. Yeah, but what happened last week, and what's happening with your current portfolio? What's happening with that? I know right now is a good time to put on your trades, but what about what happened last week and the week before? Where's your portfolio at? You don't get to see that. So you don't, how do you know they're profitable? If they were profitable, they would share it, right? Anyways, I think I say that almost every week. John Doe says, testing if you compounded the income from premiums. Testing if you compounded the income from premiums. Okay, so you're talking about the safe wheel. Oh, no, it's pretty simple, straightforward, right? 700 divided by 5,000, whatever that percent is, 12%, you know, you'd be up 12%, whatever you were doing. If you traded exactly like I did, you'd be up 12% from whenever from 2022. So if you had $100,000, you'd be up 12%. If you had $1 million, you'd be up 12%, right? So you don't necessarily need to do any fancy math there. Will says, I wonder what else they're trying to conceal. Well, it's the losing trades, right? They're hiding the losers. They might admit that they're down on a trade, but they're not telling you how much they're down. Like their account is literally down like 30% right now, but they're not going to say anything like that. They're going to say, oh yeah, I'm down right now, but right now is a great opportunity to put on a new trade. No, I want to know how much you're down, right? Give me the numbers. I mean, isn't this a numbers thing? Trading? Isn't it about numbers? Like, why aren't we getting the numbers? So hit that like button. So that will help my channel grow, and it'll help me get the word out that I'm trying to get people to share their actual real net lick P&L in order to prove that they're profitable or not profitable. If you believe that you want to learn from instructors that are profitable. Now, if you want to learn from instructors that aren't proven profitable, then that's, you and I disagree on the philosophy of trading, and that's okay. We can disagree on that. But if you believe that you should learn from someone that is profitable, hit the like button so we can get these guys to prove whether they're profitable or not before they sell things. Mad Mike says, thank you, Carl and Avery. You are welcome, Mad Mike. And in parting, I'd like to say, because I'm getting ready to close the session down, if the P&L is not real, what else are they trying to conceal? Thank you, guys, and I will see you next week.